This is going to be a review for Friday the 18th of July 25. I'm going to be going over some pretty cool setups that happened today, mostly on NASDAQ. I just felt like I was seeing the market really clearly. Just this morning, and there are a few things that work quite well that I wanted to go over and make sure I really remember. I've already done a bunch of markups. This is one of them. It's the second one I'll go over, but the first setup I'll go over will be a long ahead of the open. So I'll do a quick give a context of where we are at all-time highs on NASDAQ, and after a nice rally, we've been consolidating a bunch the last few weeks. We then had this long wick put in on Tuesday, and then sold off, and then started trading higher, overlapping this wick. So really nice bullish signature. And the fact we left this wick, very long wick down here, and looks like we should leave a fair value gap. I anticipate we should continue pushing higher from here, but that being said, this was quite a consolidation type environment, and so we'll have to see if we do get a continuation higher, in which case that would indicate a lot of bullishness, but we could just pop straight back into the range as well. Favouring more bullishness though, but going back to where we're at. So you can see where we opened up at 1800, it's roughly here, and we were consolidating at a big premium after a big rally. So there's a few frameworks I like to look for in this scenario. I like for us to engineer a area for trailed stops and then attack it. That's one of the main things that gives me my narrative is, okay, whoever's chased this long, where are they putting their stops, and are we going to entice even higher, such as we do in this candle here, before taking their sells out. And obviously the only place in here for trailed stops would be below these kinds of lows. And so I had that in mind as a potential draw later in the day, but I was actually looking for a long in this area, and I'll draw out on the 1 hour real quick why that was. So first of all, we have this bullish order block. The lowest, if I mark that out like that, so this is the hourly candle open that took out the sell side, so that becomes our order block. And then if we go to the low time frame, we can identify that we engineered the Asia low, so this low here, the Asia low and the London low, just above that CST and not quite touching it. I can then further confirm that this is a very nice area of accumulation by the fact that it has a really clear 3 drops pattern. So 3 drops pattern, that is one of the signature patterns of accumulation. And so when we have an area of accumulation and with the 3 drops pattern, as well as if I compare that to ES, you can see we've actually got SMT down there as well. So ES making higher lows as NASDAQ made lower lows. So we've got SMT on the lows and a 3 drops pattern, making this a very clear area of accumulation. We then have engineered sell side above the CSD, but falling just short of it multiple times. And then the fact that we're at all-time highs, you can always be sure that there's someone trying to short all-time highs, meaning that there's always going to be some nice buy side above the high of day. This is the London high, being the high of day, and the fact that we had this really nice sell-off like that going during London, and then just this long consolidation in here. This is just a really obvious reversal kind of pattern, like head and shoulders type reversal, and so you can be sure that everyone in this area here who is bearish is putting their stop right above that high and trying to short all-time highs. So I knew there'd be a large amount of buy set up there. I could tell this was a previous area of accumulation, and that we were now raiding sell side into a previous area of accumulation. So that sets the framework of why I was looking for a reaccumulation down at this level to target that high. So dropping over to this side, I'll actually bring up the 5 minute to start with and try and get some nice candles in there. So you can kind of see what we're looking at. So there's the 3 drives, the order block, the Asia low, London low, and then we come over to this area. So in here, first of all, we have the engineered sell side from the London lows down here. You can see that we're at a deep discount below the 3 AM open as we engineer this low. We engineer this sell side at a discount below the 4 AM and then entice to a premium. So this entire time we're at a premium as anyone who wants to long and is going to put a protective buy order, sell order below these lows. They're now buying at a premium and then eventually selling off. 6 AM opens up and we drop immediately to a discount. So that's the first sign that we are accumulating below the 6 AM open. We then drop into that order block. That's actually where I got long, and I wasn't sure whether or not we would come below this low first, which we didn't, or come below this low, but I trusted that this was a previous area of accumulation and that this bullish order block on the 1 hour chart will hold. And so I actually placed my stop below the 1 hour order block low. Got in here. I ended up taking a partial up at the high. There's a nice volume imbalance in the 1 minute, and I trailed my stop up and got taken out. Luckily, I eventually, after getting frustrated with these relatively lows getting left and getting a bit confused by the fact we were leaving all these long wicks, I eventually clicked that we were making an original consolidation, and it was going to be a market maker sell model, that's what the next trade I'll get to is about. And it's just really cool to be able to anticipate and see real time and trust that this is a market maker sell model forming. So I did end up getting back in, but initially trailed my stop up, got stopped out, and but I was very confident the entire time that this was reaccumulation, simply because of the narrative we see over here. Obviously, we're also dipping below the Asia low, so we're dipping below that old low each time, and I'll actually make that like so, just so we can see it nice and easily. So we've got the CSD, the hourly order block, and the Asia low. You can see that right before 9:30 at 9:15 we actually dropped back below all of those after having this breakout, and that fits in with this market maker sell model over here. But first of all, I want to talk about this market maker sell model right here. So we've got original consolidation seen by these equal opening prices. So these hourly candle opens 2100 and 2200 at the same level. That indicates original consolidation. We then push higher, put in a short-term low, intermediate term low, short-term, that's first stage. Then we have IOPD, second stage, smart money reversal. And if this is smart money reversal, then we're looking for first stage. We have a short-term high, intermediate term high, short-term high, distribution. So now we've identified that this is indeed first stage of the market maker model. And then what happens after first stage? Well, we have second stage, and it's essentially a return into whatever there is, fair value gap, whatever, and then sell off again. Usually you want to see it remain in the lower fair value gap and be show a lot of heaviness. But it doesn't have to, because when that is not the case, that indicates that we are not actually that weak anymore and it's likely about to reverse. And so that's what we see here, where we actually reprice to the high end of this fair value gap but we still sell off. And what I've noticed that completes a market maker model is that when second stage delivers to making a new low, so as soon as it breaks that low, we can now reverse. This is now the market maker model has played out, and second stage has played out as soon as we touch that low. And sure, I can keep on selling off if it wants, but at that point I'm like, okay, if I'm looking for a reversal, this gives me confirmation that whatever has been occurring in the past, so this market maker sell model on this side, that's no longer a factor. And if I am bullish and looking to accumulate a long position within this previous area of accumulation, this is a great area to do it. So that was another confluence as to why I was confident with this being a long. And once we broke this low, I saw that and I was like, oh, okay, well, this is actually a good place to get long. I got long again in here, and I'll show you what I did on the lower time frame, and eventually got stopped out here before eventually realizing what was happening in this area, and I bought the run back into return into original consolidation after displacing above, turning back in. And that is because I'll drop to the 2 minutes. That is the phase of price delivery we were in. So with a phase of price delivery, it goes from consolidation to expansion to retracement. And if it's going from a consolidation, it's usually a retracement into an order block, and then expansion. We then have reversal, a retracement, expansion, consolidation. We don't reverse from a consolidation, so it retraces, and then it expands lower. But I recognize that this was the original consolidation, and that's also because 7 a.m. and 8 a.m. not as clean as over here, where the opening prices are perfectly equal, but they are still relatively equal, and this is a clear consolidation in any case, making perfect equal highs, just going sideways. So once we have this breakout of the original consolidation, I'm expecting a retracement, and because I was bullish going for this high, I trusted that if we retrace, we're not just going to go straight through. We should stop around mean threshold to the midway through this consolidation, and that should hold. And around mean threshold, what do we have? We have this impulse low. So I recognize that nice impulse low. I also expected we were likely to return to this hourly bullish order block as well. And sure enough, we did. I bought at the impulse low, however, and yeah, then we get this nice expansion, and it hit buy side really fast trade, and worked out really nice. Yeah, so another reason why I was looking bullishly and why I trusted this to be a consolidation, expansion, and be a market maker sell model is because of that narrative I mentioned earlier about trailed stops. So obviously, at that big rally, trailed stops need to go somewhere. We haven't taken any sell side from the previous day. Like that's the 1800 open right here. We continue higher from that essentially. When I saw all these wicks in the 15 minutes, I was a bit thrown off because I was thinking, well, if I'm bullish, but I was expecting it to drop down here, make a nice, reversal type of thing, and then rally up. But we were leaving these smooth lows, relatively smooth lows. And on the 1 minute and 2 minutes, you can actually see like a lot of smooth lows in here. And this narrative of these long wicks, traders tend to see that as support and bullish rejection. And so I knew that this in a way was kind of creating the narrative that they were enticing traders long. So it wasn't until I recognized this being a consolidation and how I saw how that would fit in with the bigger picture of raiding the London high and then selling off, that I really trusted that, okay, this is no worries at all. I'm not concerned about these long wicks because I can now see the narrative and how that plays out in the market maker model. Drop into the 1 minute real quick. I don't want this review to be too long, but it's been a long day. You can see that breakout above these relative equal highs, dropping back into the original consolidation, swooping below that impulse low, impulse lows usually make the best soups, so that's why I trusted that, getting that nice reaction and then rallying up through here, and that delivered very smoothly. I took a partial as we hit this short-term high up here, which was a good spot, just because a inversion fair value gap up there, and when it's a manipulation like that, that can often reject price. But yeah, then hitting our targets right at 828, a nice aggressive runner higher, and completing and making the smart one reversal. Now this is a really cool pattern that I've seen 3 times just this week, is where you can identify a market maker model ahead of the open, and it ties in with the volatility of the opening. So as I mentioned before, when you have 2 opening prices near each other, that's a lot of the time original consolidation. We have that here, 7 a.m. and 8 a.m. If that's original consolidation, we then get expansion, and then we're looking for first stage. First stage is when we have this. When we have a short-term low, intermediate term low, short-term low to the right of it. So that's first stage. We run up, we break that high, so that's first stage completed. And after we have first stage, we're looking for second stage. Second stage is the return into a fair value gap, usually institutional order flow intradrill, partial return into the fair value gap. That's what we get right here at 927. That sends us higher, and then 928 hits our target. So that's an entire market maker sell model buy side of the curve playing out ahead of 930. So at this point, when 930 sells off like this, and then has this failure swing, also putting in SMT as it makes the failure swing, making these long wicks, 1, 2 long wicks, this long wick, as well as the fact that we had a, I'll do it on this side, we had a gap up. So we have a gap up, and when we have a gap up, obviously everyone's going to want to trail their stop somewhere. Whoever was tripped in long above these regular trading hour highs, they're now long, they want to trail their stop. We engineer a nice low for them, rally higher, and then we make this nice long wick. It looks like a bullish rejection. We also have this 929 bullish rejection long wick as well, and then we start rolling over quite heavy. So that gave me the narrative that, yep, this is looking like a reversal. And obviously we have these long 15-minute wicks enticing from support, and this big rally enticing more longs from support, as well as the breakout above the highs that then took out traders who trailed their stop too tight and who would have been wanting to buy up here as well. So smart money is accumulating in short position, creating the narrative with these candles and these long wicks that it's, bullish rejection, a good place to buy. Rolling over in this area here, I was very keen on a short, and I was actually watching this fair value gap, but it just wasn't supporting that idea. Really, it should have, once it closed below it, that should have held, but it didn't. It then climbs back up, and ideally I would have also wanted to see this remain intact, this fair value gap, but it got above that as well. So at this point, I was really just watching, and I was very confident that we would melt through these lows, but it was just giving traders a bit more time to get involved to the long side and waiting for that 9:50 time of day, which is where right here, and that's where the games really began, going into the 10 a.m. news, which spiked up and sold off. But what I really like is these long wicks, that narrative, and just the way that we had these 3 drives, 1, 2, 3. We have this long wick that was being respected at the midpoint as well, quite nicely. This also ran above that London high just by a tick. And yeah, so when we run up to this deep premium, this is not what you want to see if you're bearish, unless it fails. So essentially I was just waiting. When we were up here, I recognized that, okay, we're above this fair value gap again, which I didn't want to see happen. But also, if we're above this fair value gap and we're bullish, there's no way it should get back below it, because this is a dealing range from this low up to the high, and we never broke the dealing range low down here. You could, I guess, argue that that could be the dealing range, simply because we have the short-term low that we took out there. But in any case, with that much price action in this area, once we are picking a direction, you kind of want to see it stick to that side. And then we also had this fair value gap here as well. And just the fact we got back up there, you'd want to see it start finding support, especially seeing as all these wicks in this area, that's all very balanced. This is completely balanced. So if you were bullish, you'd be anticipating this to be a breakaway. You wouldn't want to see price get there. And you'd also be expecting one of these fair value gaps at least to be holding as support. So I was watching forwards for that to fail to happen. We make this high up here, we drop back below, and then we start consolidating down here. There are no inefficiencies right in this range. We break the low there, we break it again, and then we rally up. We fail to take out this high, and as we started dropping back down again and started breaking this low, I recognize that as a good place to get short, because we were now disrespecting what should be holding if we're bullish. And if we look at this long wick, we're also respecting the lower end of that. And what I mean by that is I like to use wicks for entries as well at times, and I haven't figured out the precisely consistent way to do it yet. But one of my observations is that if let's say I'm bearish and I'm looking for a price to remain below the wick, I figures that then I'm expecting the midpoint to kind of hold. If it reaches the high of the wick, that's probably not good anymore. And as you can see, we didn't actually touch that wick, the high end of that wick. But even if we had, we were getting back below it, and then got short in there, had a nice sell-off low. Just touching these lows, we didn't hit ERL yet. Started consolidating ahead of news, and then news runs up, takes everyone out, including myself, as we run back above this pre-market buy-side pull, which I believe that's what we were likely referencing, or this impulse high up here. But yeah, just really getting everyone out of the market, selling off nicely. But you can start seeing the market maker sell model become apparent here. So we've got the consolidation, first stage, second stage, smart money reversal. We then have the low risk sell, short-term high, intermediate-term high, short-term high, displacement low. And this is another cool little area because, as I mentioned over here, where were we? When we're looking at this market maker model, this one here, I was mentioning how with second stage, you want to see it remain really heavy. And if it doesn't remain heavy and show you those signatures, it's probably about to reverse as it does right here. In this case, over this side, it does show you that heaviness. And that's signified by, after we put in this short-term high, we make a really massive wick. Do we return up to CE? No, we barely even get into the wick at all, and then continue to displace lower. So this is a signature I look for that I call long wick plus displacement. And when you get to that combination, that usually indicates that it is very bearish. And so at this point, you could say, okay, well, we've clearly had a market maker sell model happen, and this is the first stage. Next, the second stage, and we've just printed a signature that signifies heaviness in the market. So I can anticipate this should remain open as a breakaway gap. We also have the narrative of the trapped long traders from these long wicks down here, these long wicks in the support level, and whoever's trailed their stops below this long wick, and from the previous day, whoever's been chasing this long ahead of the open, whoever's been buying this support level all through here, whoever bought on the way up this area here, they're now underwater. And price is now showing a signature that we're very heavy from the long wick and the fair value gap. So this should remain unfilled. We also have the new day opening gap right there as well. So that's this right here, it's this gap, that's the new day opening gap. We then return back up. We fail to fill the breakaway as expected. We fail to reach the new day opening gap. That's a signature of weakness. And in a similar way, see if I can say this word, similarly, I don't know if that's right, but yeah, English. We fall short of the 10 a.m. opening price. That then rolls over, and that could, as soon as we break that low, that could be considered second stage completed. But as I mentioned, when we are showing these signatures of heaviness, we're likely to go further, and we do end up making another low right here. And this is a nice little trade that I looked back at and I caught as it was happening, where we have this narrative here of a low being created with multiple long wicks. We then trade higher, printing 1, 2, 3 long wicks on the left side of the curve, giving the narrative of whoever is looking for longs, they see this as a very strong bullish rejections. We then have this aggressive down closing candle that also prints a long wick. So yes, another reason why now on the right side of the curve, if we zoom in, if that's the left side and then that's the right side of the curve, on the left side we have the narrative of enticing longs with long wicks, and now on the right side we do the same thing with this long wick. And so I figured that this could be a great short. And as I mentioned, put your stop at the high end of the wick that you're referring to. Yeah, that is a stop loss. And you sold at the midpoint of that wick, doing this return back up above the 20s and targeting, if we see if I can turn it on, it's not on. We look at opening at the prices that we're reaching. So we've got the 200 down here. We just hit the up at the highs, we just hit the 320s, which is another key level. So 20 points above 100s level is a lot of the time a great place for reversals. So so creating this what's likely a false low, then creating the narrative on the left side and right side of the curve that we're enticing longs, and returning into that area for a short. Your target 10 points below the 200s level, or 8 points just to be safe, which will put you right there. And so as a scalp, like that's a pretty good scalp, just going like that. Realistically, you'd probably be getting a fill more down here and putting your stop there. And then, but still, you could easily get 2.5 R or 4 or 5 R out of it. So yeah, I thought that was a pretty cool one. So that's just NASDAQ. I'll jump over to what the other things I was observing. It'll be easier to do that actually on I'll load up a different chart. So I'll do that on this layout, which is what I usually trade on. And I'll just go for 2. So this is YM, and I'll quickly show the context. So also consolidating a whole bunch, looking fairly weak. We did just take out this impulse low and start moving higher. But what I was looking at is, as you can see, I've marked it out right here, this daily Sibby inversion. So we've recently gone above it. We then, if I mark it out with a box, went above it. We then started digging our way into it, eventually taking out this key sell side level, getting a nice rejection from there and coming back above that inversion Sibby. And now that we're above it, I figured that if we were bullish, we were very likely to come down and tap that high, because as you can see, we closed the previous day right up there. If I drop down to the 1 hour, you can then see that that's the new day opening gap. We closed that day, but then we spent the entire day at a deep premium above that level. So I figures that there's a good chance we would drop down into this area at least, and likely down further as well to the new week opening gap down here. And within this range there's a lot of sell side as well. So I figured that could be a nice possibility. We then have this situation. So if we look at this high over here, it's previous day high, another previous day high. Those were made perfect equal highs up here. And then we sold off, took out this low and came back up. And now during the pre-market at 3 a.m, we actually rallied above those relative equal previous day highs and dropped lower. So when I saw that, I figured, well, there is a good chance that this could actually be bearish to head down to at least here. I then identified that we had these smooth highs on the hourly chart, 3 smooth highs engineered there. And I thought that, okay, there's a good chance that if this was a reversal, this could be a nice bearish order block. And we might run up there and then reject and go lower. So I was really keen on that idea. And it did play out, however, I didn't catch any entry. I kind of wanted to identify what I could have done. So obviously we've got these smooth highs. And we ran up ahead of the pre-market and then sold off. And if I jump to the 1 minute chart on the right, get a bit of a closer look. So it's the 15 on the left. So what we have is these smooth highs put in, consolidation down here, begin climbing higher, 8 a.m. goes straight to a premium, consolidates at a premium, we leave all these smooth lows in here as well. 9 a.m. then runs up, takes out all this buy side, consolidates at a premium up there, and then begins selling off like that. Drops below these lows, and this is the point where I was very close to catching this. I did see this running up, and I was very, just on my demo account, my paper trading account, I was very tempted to hit the short button as it ran up. But then as you see, as soon as 9:30 hits, it just tanked. And as soon as it tanks, it's like, okay, where do you get in? Sure, I think it's going lower, but in just 3 minutes, we've already hit, that daily and SIBI high. And it had a really aggressive move in one direction. You don't know if it's going to retrace up to here or what. So, unfortunately, missed that one, but it's really cool to see how it did play out like that. And I think the way that I could have had the confidence to really get in this is, one, to identify this 3 drive pattern. So we've got 1, 2, 3 drives as seen over here. 1, 2, 3. Displacement lower. Then also recognizing the fact that this is a support level that we've just broken. And everyone had just been enticed long and trapped at the highs, so not expecting this high to get taken out. And then just looking for a retracement to a premium to go short. So identifying premium of that range and just going, cool, anywhere in there is fine. Also looking on the 15-minute chart, we have these long wicks printing that bullish narrative ahead of the open. Bullish narrative, I mean by traders are going to look at this and see that as a bullish rejection. Oh, cool, we've just reversed down here. We're super bullish, and then sells off. Last thing, and then I'm going to bed. On gold, not going to go over all this. We've just got the daily wick CE that we dropped into, taking out this previous day low, referring back to this old trailed sell side pull from way back. Where am I at? So rally, trailed sell side, referred to it multiple times, came back to it at the daily wick CE. reversed referred to this all's low, the same situation, trailed sell side pull, referred to it here. And that's an interesting point. What if we do the same thing here? But anyway, we were then rallying up with this really nice rip from 2 a.m. all the way up into 4 a.m. And we had a clear draw of the Thursday previous day high. Not so clear how high up we'd go above that, but very likely was this short-term high right at a deep premium up here. And then we've obviously got this long wick, but usually when we have a really long wick and then a high to the right of it, we'll usually hit that high quite easily. So I'm looking at this area right in here. Oh, this looks so messy. So here we are. That's the 2 a.m. ripping up. We've also got a old new day opening gap up here. And that's from this previous day high. So this previous day, new day opening gap. But yeah, so what I was looking at is how this is the draw. In this area, I wasn't confident enough in this to buy down here because it's like, are we going to come down for this impulse low? There isn't really any liquidity, any like major significant levels in here for us to reference. So I didn't catch this long, but eventually 5 a.m. rips. And at this point we have 4 a.m. We consolidated and accumulated at a discount below the 4 a.m. open and below this resistance level at the 50s. So 350, a key institutional level resistance, accumulating below that level and then displacing up through it. We then engineer this sell side pull just above the 4 a.m. open, which is that hourly accumulation. So once we've done that, I trusted that if this is accumulation, then if we drop back into it, that's returned to reaccumulate in this previous area. So mean threshold right here should remain intact. So I bought right at a deep discount, recognizing that it felt a bit dodgy because of this 5 a.m. low, which you can see we have literally just referenced now. Because there was just an open, went straight up, and usually I'd expect that to likely get hit, which it didn't in this case, but it still felt a bit dodgy. But yeah, we respected the mean threshold of this previous area of accumulation. So all this sell side from up in here, accumulated, and then accumulating below the hourly open. Below resistance is retail sells, smart money buys, returning into that accumulation, taking out this engineered buy side just above it, and yeah, it just worked its way higher and wasn't interested in any of this. So yeah, that will do for this review. As you can see, a lot of stuff going on, but there were some things that really stood out to me that's working really well, and that's the main things to take away is these 3 drives being an old area of accumulation and then this returning to reaccumulate. That is really key, super key. Really like that. The next thing is the market maker model that's made apparent ahead of the open with the original consolidation and the equal hourly opens. Then we got first stage, second stage, how that plays into the rest of the market maker playing out. And when you identify this pattern and you're expecting a potential reversal, you can now really trust it, because before I'd think, oh, maybe we're going to take the London high in reverse, but then we'd get this big candle and I think, oh, maybe not, maybe yes, maybe no. But once I can see this pattern of, okay, consolidation, first stage, second stage, we hit the London high, this is bearish. I know this is bearish. And then I see, oh, short-term high, intermediate-term high, short-term high, and when I see the framework of a market maker model aligning with my expectation on price, that's when you can go into an area like this and go, yeah, well, this is an obvious sell and we shouldn't get up here. This, I'm not expecting this wick to get filled. This is just super, super heavy. And you can start really putting all the pieces together just by recognizing a sequence. This is really what this is. It's a sequence of price delivery that you expect to play out with in the context of a classic market maker sell model. The same thing over here. If you're looking for this market maker sell model from this original consolidation and you recognize that, you then see us run higher. You're like, oh, well, we're obviously going for this high. This should be first stage. We then get that play out. So you're like, okay, now this should be second stage. And then when you see this reversal, you're like, well, we've had first stage, we've had second stage. This looks like a reversal. And then you can trust getting short. You can maybe also trust your this in here. And then, as I mentioned before, when I saw this first stage play out, and then I saw this second stage play out when it broke this low, I then started putting the pieces together, thinking, okay, well, actually, I'm beginning to see the bigger picture. So it really gives you a really nice framework and sequence to help you trust all the other frameworks that you have. But yeah, that'll do.